Hey, good morning, everybody. It is Mike Wise, CMG Home Loans, and just wanted to reach out to you with a mortgage update this week. It's been quite the week and beneficial to everybody in mortgage and real estate as far as the interest rates are concerned. So let's get into it here and take a look at some of the things that happened. So, first of all, inflation week. It was a big week in inflation, and initially, it started off real bad because when the producer price index came out this week, it was expected to be at 0.3% and 0.2% for the core, and it came out on fire at a half 0.5% and 0.5%. So this was a huge number. The market went crazy. The yield started to go way up because it's like, oh no, inflation is still here and it's still hot. And then all of a sudden the numbers came out. They revised last month's producer price index down 0.3%, which actually put last month in a negative position for inflation. So inflation came down last month for the producer price index. The producer price is on the producer side, is the wholesale side before it gets to the retailer. So that was a huge change. And then all of a sudden the markets changed, turned around and got better. And then the next day, the consumer price index came out. And that consumer price index, it came out, it actually showed that inflation on the consumer side was coming down. Now, I want to dig into this a little bit further with you guys because yes, the inflation is coming down. The core, we can look at that. The year over year went from 3.8% down to 3.2 or 62%, which is a good number. But let's dig into it a little bit deeper here. If you look at the yearly effect, so the 3.62 number, right? And you actually take out shelter cost, which is 45% of the CPI, right? That's a big number. So shelter cost is rent, owner's equivalent rent, which is a crazy number I'm not going to go into, and then lodging away from home. So if you take out all those things, that's 2.5% of the total CPI. And then the motor vehicle insurance. And the motor vehicle insurance, that is another piece of the CPI. It's 3.7% of the core CPI number. And if you strip that out of the core CPI, that's 0.84%. That puts everything else at 0.27%. So what's driving the CPI right now is real estate, rents, shelter costs, and insurance. So motor vehicle insurance, actually I would throw homeowners insurance in there as well, but the shelter cost, that is having a big impact on the CPI numbers and inflation staying higher. So that is one reason I don't see rents going down anytime soon either. So what was the impact on the treasuries? That turned out it was a huge rally this week. Remember, the higher the prices on the treasuries means lower yields on the interest rates. So the prices rallied. You can see this is as of this morning, Friday. We've gone up to this 100-day moving average, and I think we're going to hang right around that 100-day moving average right now and stay in there at the par 50 number, right? But what happened on the yields is they came down. So we've seen numbers all the way up. We were almost hitting 480 on the yield on the 10-year treasury, and now we're down at 4.402 as of this morning. So interest rates are trending down right now because of the inflation numbers. There's more chance for the Fed to lower interest rates in September. So that number went up a little bit more. It was more like 30%. Now it's probably more like 50% that they're going to lower lower the Fed funds rate in September. So depending on how the rates or how the rest of the economy works, we will see if that happens or not. So what's the impact on mortgage rates? Well, last week we were at 7.15%. This morning we're at 7.02%. So interest rates have come down. This is good news for mortgages. People that are buying houses, it's excellent news, and that helps the market start to move a little bit more. So if we can get these down into the 6s, that will get more people out there buying houses. So wanted to go over the all-in-one loan with you real quick. This is a loan that I love. This is a $1 million purchase that I put in here as an example. It's 20% down on an $800,000 loan, monthly deposits of $15,000 into your checking account every month, and 20% remaining, or you're saving about $3,000 a month after you pay all of your bills and your mortgage payment, etc. So if you did a 30-year fixed rate loan, kept it for 30 years, you would pay $1.9 million in interest. And on the all-in-one loan, you would pay it off in 14.6 years, and you would save $459,000 in interest. I'm not going to go over all the details of this loan, because if you want to call me, talk about it, I would love to go over these numbers with you and show you how this works and how your client can benefit with this loan. So, interest rate. Have you heard your customers say, I don't want to buy because interest rates are at 7%? Fine, that's okay. On the all-in-one loan, we can get you down to 4.483%. I will show you how you can do that. If you want to give me a call, I can go over that with you. Keep in mind, this is a principal paid first mortgage with interest-only payments. So you can see here that your average minimum monthly payment is $5,300 here. And on the all-in-one loan, the average, this is the average of all payments, is about $3,700 a month, and you pay it off in that short amount of time. So call me on the all-in-one loan if you have any questions. Also wanted to show you, last thing here, CMG came out with our Cash Advantage program this morning. Basically, it's a buy before you sell your house. So we can actually purchase your new house with all cash, no contingencies, no appraisals, no loan contingencies, and get you into that house super fast, and then you can sell your house. So again, call me with details on that if you have any questions, and I'd love to go over that with you in more detail. So this is Mike Wise. This is your mortgage update for the week. I will be around this weekend off and on here. I've got my granddaughter's first birthday party that I've got to go to on Saturday. But we'll be around. So if you have any questions, please send me a text, call me, and we'll get you taken care of. Have a great weekend, and we'll talk to you next week. Bye-bye.